Hi guys, welcome. VMware has just released its latest quarterly reports. VMware is another solid technology company that is riding on the recent wave of demand for cloud computing, powering the virtual space amid the current work from home arrangement. The results show good growth in revenue and profits. In this video, I'll be diving into the financials and the technical charts to answer these three questions. Is VMware worth investing in? Is it a buy or a sell at the current price? And whether VMware is trending up or down from the technical charts. So let's jump into it. The revenue has been on a steady rise since Q2 of 2018 from $2 billion to $3.3 billion in the most recent quarter. VMware has been a profitable company and has been producing a consistent operating income. The recent jump in revenue has bumped up the operating income to $1 billion in the most recent quarter. The R&D investment has been growing as well, but at a slower pace. The same goes for the sales and general and administration. The higher revenue growth and relatively lower increment in R&D and sales and general admin have resulted in a higher net income growth of 82%. Just a note that there was a big income of $4.9 billion in 2019 due to a one-time tax benefit. The net margin has been hovering between 11% and 24% for the past 2 years. There is a general uptrend in the margins and I'd like to see this continue. A margin of 11% leaves a little room for unforeseen situations and can easily drop into the rate. Still at 24% for the most recent quarter, VMware is comparable to the top most profitable 5G stocks. Skyworks Solutions has a margin of 33% and Qualcomm is at 29%. Do check out the 5G stock analysis video at the top of the screen. The earnings per share for this quarter is $1.86. This is again another big jump from the previous quarter. The trailing earnings per share of the last 4 quarters is $4.86. This is a proxy for the yearly earnings per share. VMware has good positive cash flow from operations, really solid performance. There was a cash inflow of $3.8 billion in investing activities in 2019 due to sales of securities. This cash outflow of $2 billion was due to a business acquisition. VMware opted to give a special dividend payout due to the big gain of $3.8 billion from the sale of the securities. This amounted to $11 billion. Other than that, VMware does not have a consistent dividend policy. VMware's cash position is healthy but has dwindled from $6 billion in 2018 to $4.7 billion in the most recent quarter. The decrease in cash holdings is evident in the quick ratio that is sitting at 0.5. Minimally, a quick ratio of 1 is preferred. The quick ratio measures the ability of the company to service its short-term financial obligations that need to be serviced within the next 12 months. But it has been at this level for the past 2 years, so should not be any concern. Overall, VMware's balance sheet has remained healthy, and with the total assets growing at about the same rate as the total liabilities. VMware has very little debt and they have been diligently paying off the debt. I like companies with little to zero debt as it makes the company strong financially and less chance for erosion of profits in the form of interest. The amount of interest expenses is roughly about 12% to 6% of profits in the most recent quarters. VMware is managing its finances well and protecting its profits. The book value per share is at $21 currently. The book value measures the net asset value, which is total assets minus the total liabilities on a per share basis. At the current price of $153, VMware is trading at a multiple of 7 times price to book. This is a very good valuation. However, the PE to growth ratio is very high at 8.9. The PEG ratio measures the PE in terms of revenue growth from the same quarter the previous year. VMware's stock price has gone up from $125 in Q2 of 2020 to $153 currently. At the same time, while the revenue has been growing, the rate of growth has dropped from 20% in Q2 of 2020 to 3.5% in the most recent quarter. It is due to these two divergent moves that the PEG ratio has resulted in a spike up to 8.9. The PEG ratio of 1 indicates that the price is increasing at the same rate as the revenue growth. And a ratio above 1 is when the price has gone up too fast and is not supported by revenue growth. Investors look for a ratio of below 1. At 8.9, VMware's PEG ratio is way too high. VMware's price has been rising steadily since 2016 and has accelerated sharply since the big drop in March of 2020. The run-up since 2016 has corrected quite deeply in the blue trend channel. Price has since broken the trend channel but is unable to move further up rapidly. There are 2 resistance levels at the current 150 level and the next one is at the 170 level. The volume is quite decent but the price is not able to recapture the 150 after 2 previous tries. Now it is trying for the 3rd time. So, is VMware worth investing in? It is profitable and has a strong balance sheet. The profits are on the rise as well. Is it worth it at the current prices? The valuation of 7 price to book is enticing, but the PEG ratio is way too high. Technically, the price has risen sharply and is consolidating right now. I don't see a catalyst for any big jump in the price in the short term. I'll pass VMware at this price and look at the 5G stocks that have a much better profitability and are growing at a faster pace. Speaking of which, I just released a video comparing the 5G stocks Qualcomm, Skyworks Solutions, Qorvo, and Broadcom side by side. Do check out that video too for insights on what is the best 5G stock to invest in now. Do subscribe to my channel if you have found this sharing useful and hit that notification bell so that you don't miss out on any of my future videos. And I'll see you soon in the next one.